All right, everybody. I anticipate everyone can hear me, but we will check. Let me just do a quick audio. Yep, it says that you can hear me. So if you can't, let me know. Hopefully things are going well for you guys. Just figured I'd hop on here, do a quick Q&A. It's been a minute or so since I've done one. Normally when you guys talk to me, it's on the Friday night live stream through Twitter, Instagram, whatever. So I figured I'd just take this opportunity to take a minute, maybe hang out for 20, 30 minutes. I do have something else to do at 7 p.m. Central Time. So some of you guys, I'd say some of you guys, it's a little later or whatever. But just wanted to hang on here. If anybody shows up, they show up. If they don't, they don't. It's just a opportunity for people to ask me some questions or just ask for anything and see where it goes from there. Money Momentum. First one in the chat. Hopefully things are going well for you, man. Yeah, so it might just be just a minute for people to kind of start lining in if anybody shows up, which is also okay. If nobody shows up, we got the green screen working extra hard in the back as well for anybody that's interested in commenting on that. But yeah, just here to answer any questions. If I haven't checked the portfolio today. Things were being somewhat offset by Bitcoin being up. So I anticipate the rest of the portfolio is slightly down, but we are at about 948 in the portfolio. Wish we would be a little bit more, but it is what it is. Did you buy more growth positions during this dip? Yes, I sold out of, sold out of some Philip Morris and utilized that capital to be able to buy 200 shares of TQQQ. Which I also sold some covered calls on and made a little bit of money through that as well. But I anticipate I'll just be continuing to buy further positions kind of going forward. I'm trying to think if there's anything else. I have some money coming in. I did buy Facebook as well after the recent drop. So I'm down a good bit on that because obviously it's continued to retrace a little bit, but obviously not down from the 30% or so that it's dropped pre-earnings, but I'm going to probably continue to add to that. I think it's a good opportunity. It's trading at a stupid multiple here comparatively to the growth that it'll probably continue to see, especially as like metaverse and stuff continues to come online. So I think it's a good opportunity here as well. Sorry, just checking some stuff, and then I think I might also download something quick. So if you guys have any questions, I'll let the chat load up a little bit, but just do some quick work in the background if you don't mind here. So yes, open for any sort of questions. Been doing a little bit of fun stuff in the NFT space, trying to launch some stuff with that, just having fun with it. So far so good, a lot of fun, met some new people. Okay, that video is still processing there, so let me just double check that it's processing on my phone. But yeah, relatively cool in that space and continuing to accelerate. Some friends had some really cool ideas, so I'm going to try to launch those, so that'll be a good time as well, launching that and being able to introduce them to the space as well. I think I've got them to buy some of the Bored Ape Yacht Club stuff on the Ethereum Classic, which I was buying into. Haven't really got them to buy into anything else, but yeah, that's relatively it. So I'll probably hang around a couple minutes, and if people decide to join and ask questions, I'll be more than happy. But if nobody wants to join, that's understandable. I kind of did it spur of the moment, so you can understand if people are in the middle of stuff at the moment. Hey, Jace Place, always supporting, man. Thanks for the continued help. Yeah, it's difficult to like kind of just like, I don't want to say come spur of the moment, but it's like I don't want to reiterate stuff that I've reiterated to some groups. Like I had a good conversation last night about being a portfolio manager. To be like invest in individual stocks, you have to be a portfolio manager. So you kind of had to act like one. But meanwhile, like I don't think a lot of people recognize like all the different work that a lot of people have to do, more specifically portfolio managers have to do in order to do extremely well. They just like assume they can just buy a stock and completely disregard all macroeconomic trends and think they can continue to do extensively well. So yeah, I think it's pretty funny. We got Hot Kyle in the building as well. What's going on, Hot Kyle? What do I think about Google, this upcoming split? I'm bullish, man. I think Google's going to continue to do well. I was relatively surprised by the numbers they put out. I think it's going to continue to do well. Yeah, I think it warrants its low to mid 20s PE with their continued growth as well. So I like it. I did have some people ask me though. I think like people still get really confused about like what a split really is. The total market capitalization of the company doesn't change, right? Like it's still a 1.6 or so trillion dollar company. It just means that they're literally dividing all the shares by 20, right? So like a share of 3,000 is now going to be worth $150. That's all it really means. It's not going to be a reweighting. And I think it just like is a huge psychological thing for a lot of people to think, oh my God, like if it's at $150 now, might return back up to $3,000. And while that's plausible, it means it's going to be like a 30 or so trillion dollar company. And that's just going to be pretty extensive, right? Like it's going to be massive, and it's going to take years, if not more likely a couple decades for that to happen. Obviously that incorporates inflation, that incorporates a bunch of different factors as well. So I think a lot of people just assume because it's doing a split that automatically it's just going to like magically fly off the shelf and magically go back up to 3,000. This is not the case. Yeah, man, hot calls in the house. Bought Facebook back. Man, you're pulling to meet Kevin over there, man. Kyle's bought more Facebook. Got some VYM. I don't dislike the VYM. I think VYM's a good one as well. SCHD is also pretty good. A couple hundred shares of VYM is good. But yeah, I think it's funny, Kyle. Like you kind of I don't want to say flip flopped, but I'm pretty bullish on Facebook as well. So I was just waiting for an entry point, and what better of an entry point when it goes down 25% in a day. So I'll probably try to load that up to about 100 shares and probably stop there. But got to wait for some more checks to come in, which I should be sending out some invoices tonight. So that should be good. I don't know about buying it in 2016. Apple in 2016 was like at a 12 PE. Like it just didn't make any sense. I thought it was warranted like a 15 to 20 PE back then. I don't necessarily think it's worth a 30 plus PE where it's at now, but I'll admit I've been wrong on Apple this whole time. So I don't think it warrants its valuation. I think Microsoft is a better company. I think Google is a better company in terms of future potential. And so I think that should be awarded into it. I don't think that Apple, I just think there's so much risk associated with Apple that I personally wouldn't warrant it that sort of price. But what are my thoughts on the cover call ETFs? They're great, man. I think they're really good. But you have to think about it with the context, right, of what you're doing with your portfolio. If you are, let's just say, a young 20s individual who is really just starting to get involved in investing, it's probably prudent for you to invest in something that's more focused on capital appreciation and growth. And I see so many people focusing on the 8% dividend yield, the 9% dividend yields of some of these ETFs, these cover call ETFs these days. And they kind of lose the forest through the trees. They kind of just like, you have to think like that's the majority of the income you're going to get, right? Is you're not going to get much capital appreciation from those opportunities. They're great for people that are later in their life cycle that really just are looking for an income, or for folks that truly need to have some sort of emergency coverage and need income today, which I know some folks about as well. But I also want to recognize or tell people straight up that these opportunities, these cover call ETFs, are going to experience the same exposure to the downside as an S&P 500 or a NASDAQ 100, and it's going to limit your upside. And so what that means is when we have a 20% decline, which we've already kind of somewhat experienced a partial 20% decline. I mean, S&P experienced over 10%, NASDAQ 100 experienced over 15%. You've seen what that does to the price of these covered call ETFs. It's going to take a while for them to recover. Why is that? They're covered to the upside, right? Like you're limited to the upside. That's where the income comes from, right? I mean, let's just be point blank and take a 5,000 foot view of it. And so when the NASDAQ 100 wants to run up 6% in a month, the QYLD equivalent might only be able to run up 1.5 to 2%. And so what's going to happen is you lose that upside potential to be able to get that income that you're most so wanting to generate. So you have to think where you are in your investment cycle, man. Like, I agree that the covered call ETFs are phenomenal. I have them in my portfolio, but I want to make sure, I'm looking at a different opportunity, right? I'm looking at potentially retiring early, potentially retiring as soon as this year in some cases, or some cases I might work till I'm 35. So, which gives me another 4 or 5 years to continue to get more income. So I think it's those covered call ETFs generate a lot of talk because so many people are like, well, now I only have to save $400,000. And it's like, well, yes, that's the truth. But you could way overshoot, let's just say $400,000 if you invested in, let's just say, a NASDAQ 100, S&P 500 sort of fund and get to $1 million, $2 million by the time you actually truly wanted to retire. So yeah, I think it's an interesting opportunity to look at, but keeping in mind what your objectives are for your portfolio, risk tolerances, and all those things that we always talk about. If Warren bought 50 billion of Facebook, I do think people would lose their minds. Thoughts on Homebuilders? I think it's the biggest risk reward besides crypto at the moment. I'm not versed in Homebuilders at all, personally. So I think it's just who knows, with rising interest rates, I'm curious to see what that does to housing prices, especially knowing that a lot of people may or may not be coming off of forbearance. And I don't know what the state of that is. I was more versed in it 3 or 4 months ago. But I know people like my own friends that are like, oh, like, you mean I just have to pay you $800 in insurance money and I can go without paying my mortgage? It's $2,000 a month for a couple months. Like, damn. Okay, cool. Right. Like, some people need it. Some people don't. Right. So some people, are going to take advantage of something like that. And some people are just doing it because you pay $800 to save $16,000 in the short term, which then they can use to go do other investments and frees up other opportunities, whether that's the stock market. Some of them are doing NFTs. Some of them are doing a lot of other things. So, yeah, relatively interesting in that respect. So just kind of keep that in mind when you're thinking about home builders and what that might do if there's a huge flood of supply, which I don't know. Right, I'm just talking out loud. There's a huge flood of supply. It's going to really put a hamper on new home builders. But generally speaking, I think they've been doing relatively well. But like I said, I'm not versed on the subject like I wish I was. But yeah, just I guess fill in some air while people either ask questions or fill the room. A lot of what I've been talking about in voice notes and stuff of the like. So hopefully it's not a repeat, and hopefully you haven't heard it a billion times already from me. But I think one of the cool things that one of the things that I would be careful of, not cool things, one of the things I'd be careful of is I see a lot of people running to oil and gas at the moment when oil and gas has been doing really well from mid-2020 to now. It was one of the best performing sectors in 2021. And so I think a lot of people, just like what happened in 2020 and 2021, they're rushing when everything is starting to get really toppy. And maybe not toppy is the answer for oil right now, but it's run up in price. And so I think a lot of people are FOMOing. And so I think a lot of people Ooh, that's a really good question, Alex, and I'm going to answer that one. Missed opportunity, but there's a really good lesson in there, so I want to get to that one. I would just urge people to look for companies that they do want to get into oil. There's still some opportunities. I still think that even Exxon and some of these super majors could run here another 10, 15, 20%, some of them. But I think there's more value in looking at some of the independent oil and gas companies that may have not had the opportunity to run yet. I think more people are more focused on the large cap names. And so some of these small caps are undervalued here. That's not saying all are undervalued. So you'd still have to do your due diligence, right? And I don't recommend XOP. I don't recommend the XLEs of the world. I think the easy money off of those is kind of made. And so I'd just be cautious of that. I like H&P as a potential. I didn't do full due diligence on it, but I like H&P. I think it's a potentially good one to potentially look at going forward. I'm trying to think of another one I looked at. I looked at Transocean. That one scares the crap out of me. So just because it's really cheap doesn't mean you should go and run for it. But yeah, that's the kind of stuff I'm thinking about. I also kind of mentioned with the raising interest rates, a lot of stocks have been hit since the mid 2020 timeframe. So take an opportunity. Some of these positions are down 60 to 80%. So they're going to provide an opportunity. It doesn't mean it is something you need to jump on, but it provides an opportunity across the board to find companies that you think are going to do well going into the future. Some of them are going to be duds. I'm just going to be point blank. Some of them got an increase in price just because of the pandemic, and a lot of money was flooding into the hype in some of these e-commerce stocks and work from home stocks and stuff of the like. But there are some diamonds in there, and I would take an urge for a lot of you guys to look at them and potentially do well. Now, I don't necessarily like PayPal personally. I think it's an overvalued company. I don't like the business model. I think that they're going to get undercut unless they can incorporate something more of crypto into their business model. And plus, they have competition from other companies now, like Wise, that I'd much rather use out of the UK, which they just did a public offering on the London Stock Exchange. So I'd much rather use Wise. And that's who I use to pay some of my editors and stuff like that do work for me on the side. So talking a little bit about PayPal, but using PayPal as an example, I don't know where it ended at over the past week, but I know looking at it last week, let's just see. PayPal is at 124. So keep in mind, before the pandemic, it was trading at around $100, $120 a share. So you're thinking about where you have gone from PayPal. Look at the user growth. Like, this is an opportunity to like take a quick opportunity to look at what has PayPal done over the past year and a half, 2 years since the pandemic has kind of started. Have they grown user rate? Have they grown net income? Have they done all these things? And if you think PayPal was a buy back then, you're now having the opportunity to buy it at the same price. Maybe it's something going forward. Now, I personally am not going to buy into PayPal. I just don't like the company. But that goes to show across the board other positions that you might be able to look at. Zoom has been down huge. A lot of these companies have been down huge. And while the companies might have been in retracement over the 60, 80% retracement over the past, say, 2 years, or sorry, past 6 months to a year, since like mid 2021, gives you an opportunity to pick some of them up. Some of them are dog shit. I don't like Pinterest. Some of these other companies, I think they're just not going to make money. They don't have a moat. I think they'll be able to be taken out, bought out for pennies on the dollar. I just don't think that they're good companies. But something like a Palantir, for example, here, if you're looking for a short-term trade, I still think it might have some short-term pain to go. But if you're looking 10 years down the road, I think this is a good price to pay. $13 a share is a great price to pay for Palantir if you're looking 10 years down the road. So always take a look and a thought as to why you're putting your money in. Are you taking it for a quick bounce back? Are you taking it for 10 years down the road? Those are important things to think about when you're potentially putting money to use. Think like a portfolio manager. If you're a portfolio manager, you're doing short-term investing, you're doing swing trading, or you're being a long-term money kind of guy that's trying to find the next Amazon or Facebook or what have you. So I guess this gentleman is upset about my PayPal comment. No, different person. Does overvaluing me PE is too high? I think so. Oh, you mean for Apple? Yeah, I think it's just, I think Apple is one innovation away from 50-60% of their money going away. And you can say that argument about a lot of different companies as well, right? But I just think that Microsoft has a lot more going for it, a lot more innovation. Do I buy fuel cell at these levels? If you haven't, I think it's a good opportunity. I think it could be fuel cell could be a good long-term opportunity, but has a lot of hair on it as well. It's in an interesting sector that may or may not take off, right? So keep that in mind and keep your position size accordingly for your risk tolerance. Yeah, Shopify was down big. I was starting to look at it in the 700s or 800s when it was there, and then it started to do its reversal. So, but Alex, I want to get to your question. What is my biggest missed opportunity of your investing career? Not investing in growth when I was young. There's a plus and minus associated with this. Sorry, sun's going down, so I got to adjust my lighting here. This is just like a maturity of the portfolio sort of discussion. Investing 8.5 to 9 years ago when I was 22, and I was really big into very short time penny stocks, and I realized penny stocks, I didn't know what the hell I was doing. Then I started looking more into dividends, and then I started to be like, okay, cool, dividends are the way to go. So I was mostly investing in dividends, and then that kind of was influenced more so by me seeing people lose their jobs because I work in oil and gas. And so I was like, well, shit, if I ever need the money, I need dividends, right? They're going to pay the bills while I'm here. Meanwhile, I'm 22, 23 years old, investing like I'm a retiree, and missing out on some of the greatest growth opportunities and biggest bull market that we may have ever seen from 2008 into 2021, 2022 timeframe here. So I would say that is my biggest regret, not looking into the Apples of the world, not looking into the Microsofts of the world, thinking I was smarter than I was because I wanted to make sure that I had dividend income. Matt, what's your return on your portfolio is a question I would get asked a lot. I would say I didn't care. I would say at the time, that was how my mindset was. I didn't care because I was so scared of losing my job. I was so focused on being conservative, making sure I did not lose money, making sure that I had an income stream coming in, that people would ask me, are you underperforming the market? And I would knowingly know that I was underperforming the market, but I didn't care because I cared so much about dividend income. Now that I have, let's just say, $945,000, $950,000 in the portfolio, it's very much different, right? I could swing it to, if I wanted to focus wholly on dividends, I could be making $40,000, $50,000, $60,000 a year in dividends if I truly wanted. But I recognize now that growth is an important part of it. It's not necessarily just investing in a company that yields 5%, 6%, 7%. The likelihood of those companies to have capital appreciation is pretty minimal. There's a gearing ratio almost, or like a dividend growth ratio almost, that you're kind of looking for companies that are yielding like 1.5 to 3.5%. In my opinion, it's kind of like the sweet spot. But of course, you have it, like, if you think about it, companies that are kind of going into their growth cycles, their growth spurts, they're going to be trying to give out dividends at a healthy rate, but also making sure that they're investing heavily into research and development, reinvesting back into the company. So they're not overdoing it on dividends. The reason why these miners, the reason why these oil and gas companies are able to pay back so much money in sort of dividends is because after their free cash flow comes out, their cash flow from operations and the CapEx comes out to be able to reinvest back into the business because they're very capital intensive. There's no real technology or innovation or anything of the like that they can do, right? It's just drilling holes in the ground. I mean, just be very simply and point put. It's been something that's been done. Yes, there's additional technologies, but it's no massive innovations that need to happen. There's small little wins here and there that help improve efficiency, but at the end of the day, you're still drilling holes in the ground. So a lot of that money has to be returned back to shareholders because, let's just be honest, return on capital of employed anywhere between 8 to 15%. That might excite some people, but much of the time people are relying on those companies to pay some sort of dividend. So that's what I recognize as my biggest missed opportunity. Is I'd have several $100,000 more had I invested in just the S&P 500, for example, likely, or had I invested in, let's just say, a decent dividend growth investment ETF. So the concentration, and it still sticks to me to this day. Like I still have plenty of money in some of these covered call ETFs. But I've started to try to balance that a little bit with more speculative growth, good positions, Amazon, Google, now starting to get into Facebook as well, trying to get into TQQQ, and also a decent position in the SPY. So yeah, that's kind of heavily impacted me, and really been, and admittedly been, the biggest missed opportunity for me. But it's also an opportunity to understand and get that experience so I can help share that with others. But I think so many people are always blinded by the dividend yields that kind of come out of some of these ETFs that they immediately just say, well, I'm going to be able to match the market and get those dividends. And it's just not the case, man. It's even if you are to do it for a year, it's unsustainable for the long term. So if you're able to match the market and get the dividends from those huge ETFs, pat yourself on the back for that year, but make sure you recognize that a reckoning is going to be coming for your portfolio. To use the same strategy, same strategy in traditional IRA as your Roth IRA, elected to go traditional IRA to offset paying at the end of the year. Yeah, man. I mean, I'll just be blunt. Like, what was it? 2020, I owed 60 grand in taxes to the federal government. So yeah, taxes is a huge problem on my end. I don't think it's going to be that big for 2021, but it's freaking huge, man. Like it's pretty big. Majority of people would wish they had that as their salary, and here I am paying it as taxes, and I'm still waiting on my stimulus checks and stuff of the like. So taxes is a big problem for me. It's gotten to the point where it's like I try to offset so much taxes in so many different ways. Really, the only way that I could truly do it now is either start businesses, which I've already begun to do, and then invest in traditional brokerages or, traditional IRAs or traditional 401ks. I'm still doing the Roth 401k just because it's so current at the moment that I'm just like, the majority of the money's already in a Roth 401k. It's all combined. You can't see the difference and split between the two. They're super shady about it, or like super not transparent about what's in your traditional versus what's in a Roth 401k. But when you have the IRAs, it's super simple. You're the one that has and manages those accounts. So you can see what's in the traditional traditional IRA, what's in the traditional 401k. I generally speaking will get more, I don't want to say slightly more aggressive, but I've leaned more towards like having REITs and opportunities for higher capital appreciation in the Roth, to my detriment in 2021, because that's where like I had my Wish investment, and that obviously did not do well, as everyone probably knows. So yeah, and then I'm in my traditional, I have SOXL because I think in the long term semiconductors are going to continue to do well. So yeah, that's kind of that. But I mean, I invest so much money, man. Like my retirement accounts are the majority or the least. Sorry, my retirement accounts are the minimal part of my portfolio. So I think they're less than like 30% of the entirety of the portfolio. The majority of the portfolio is in like taxable accounts. And I recommend that for a lot of people. Like, why would I do that? Why would Matt do that? He's 30 years old. Why would he be investing the majority of his money outside of retirement accounts? And it's like, yeah, I'm 30. I can retire today if I want to. I can move to Asia, have no problems, and have access to all that money. And I know so many people that give me shit at work. They're like, haha, like you're not contributing to the max to your 401k. It's like, yeah, I match whatever they match, right? They give me a 7% match. I take advantage of that shit for sure. But it's like, why would I lock up my money until 59 and a half? It's just not smart, right? Like if I want to retire early, why would I intentionally lock up my money until 59 and a half? right? It's like, I'll do the match. That's cool. Get it. Understandable. 100% rate of return day one. Got it. But yeah, I think a lot of people don't recognize that. They're just like so worried about taxes. Like everyone's so worried about taxes. Like I was even having this conversation the other day. They were like freaking out about taxes. Like paying taxes. Yeah, I understand too. I get it. Like if you don't want to pay excess taxes, I get it. But why would you like be afraid of them? It's inevitable, right? And if you have to pay taxes, that means you made money, right? Like why are you throwing the baby out with the bathwater? If you have to pay 15-20% tax, got it, but you're still walking away with 80% of the money. So yeah, it's annoying. Like I had to come out of pocket and pay a crap ton for 2020, but it means I made a crap ton of money in 2020, and it's evidence because I entered 2020 at 380,000 and I exited with like 780 or is it 720? I don't remember what the number was. I'll have to go back and look, but I mean, I almost 2.5x the portfolio. So no, that wouldn't be. A lot of it was capital contributions for sure, but yeah, anyway, it's not important. Yeah, beating down growth stocks can be an opportunity, and I say can because obviously not all of them are going to do extremely well. So just be careful because just because it's down 60 to 80% doesn't mean it's going to go back up to all-time highs. Look at Micron, for example. Kyle did a really good example of that. Micron is just kind of getting back to the prices it was trading back at 2000. So but anyway, guys, I just wanted to hop on here quick. Hopefully you guys enjoyed. Let me know if you have any questions in the comment section of this video, Twitter, Instagram, whatever. Unfortunately, I have to end this one because I'm going to start off something else on Twitter Spaces. So if you guys are interested in crypto, be sure to hit that up. That's mostly what I'll be talking about at 7 Central. And then after that, I'm going to try to meet up with some folks on Twitter for dinner because some of them are leaving back to Dallas for the night. So let me know if you guys have any questions. Talk to you soon. Cheers.